All right, let's talk about Foot Locker. Foot Locker, I'm still in this call option, moving up nicely. With the downturn of the market last couple of days, this has been holding up real strong. So I love chart patterns like this. I look at some of the other publications. I just want to give you my thoughts. And they also sold the puts on Foot Locker as well. Let's talk about Etsy. Okay, so they sold the 45 puts, and right now this thing is trading around 31. I really don't like how this chart is performing, because if you sold the 45 puts, that means that somebody can sell it to you at $45 while the market is trading down lower. And you want to be able to find a great setup around here. And then I highly recommend that instead of doing the naked put options, we do the put credit spreads, which will reduce our risk. Now, you may not capture as much premium up front, but you'll have less downside overall. So I'm always thinking about risk. And I'm not in love with this ANGI as well. So this one is down $19. And they sold this $22.50 put. And they collected that much. But basically, they're praying that it's going to continue to grow. Because they sold in January, right? So they want this thing to pop back up again, which doesn't always happen. I'll tell you how Henry here will play like something like this. So he would find a 3-price relationship here, and we can do the Fibonacci analysis, and you want to be selling it here. If it goes against you, you get out of that put credit spread position so it doesn't kill you later. Let's see what else we got. Overall markets are starting to hold up now. The last couple of days that's been quite iffy, but the Dow Jones, it captured 200 moving average. Let's talk about the Qs. Qs already captured this as well, so I like this. I like the chart pattern now. As long as it can close above this, then we're in much better shape. The one that's struggling right now is this S&P 500. This still has yet to close above 200 moving average on the daily. Let's take a look on the futures, see if it's the same behavior. Yeah, so the futures are doing the same thing. And the ticks are slightly higher today, so that's good. That is a sign of some big money coming in to buy some stuff. And now it's our job to find some really great setups. So let's come in here and look at some of these other ones. They're talking about oil, PBR, on this one. So this is definitely not something that I would chase. We want to be able to have it come down. 3-price relationship, for example, something like this. If I were to use this decline, yeah, with that symmetry and other projections, to see if I can find a 3-price relationship there. There's something called EOG. This is also oil, and this is definitely more of my jam. I've already found a 3-price relationship here. It is right there, trading above the 200 moving average on the hourly. So this is a very, very nice chart. What else we have? We have an earnings coming up on the 2nd. Volatility is a bit high. So for a chart like this is where I would take a stab at for doing a put credit spread instead of just selling a naked put. Because you get 100 shares of this stuff put to you, then you need to have quite a bit of capital to cover all of it. And doing a put credit spread, it's actually not as hard as we think. Let's just say if you want to do something 4 days out, and in 4 days, I am betting, taking an educated bet that's going to stay above 120. So I can take them to this series and I say I want to sell this vertical right here, and I want to take in a $22 credit today. And the worst thing that can happen to me on this trade is a $78 loss. Okay, and that would be all. That would be the whole risk that would be involved in this trade if I were to do it. If I'm a little bit more adventurous, and I can say I can try for the 21s, because the closer you are to where it's currently trading, then you're taking a more risk, right? And also the width of your spread. Let's just say if I'm planning on selling this series, vertical spread, but I decide to change this to like 120, I'll take in a larger credit, but there's always a give and take. You always want to take a look at what's the worst case scenario on my account. If I were to take in a max profit $66, the max loss that can come against me is 134. Let's just say within the next 4 days, this thing just starts tanking. I'm talking about like gapping down, and that's a possibility. At the same time, the worst thing that can happen to you, even if it goes to zero, is $134. So I think we should always come from the perspective of risk, and when we start to trade like that, then we'll get more consistent C, and that's what we want as we become more refined as traders. Let's take a quick glance at another publication. So that's oil. And another thing that talked a lot about the cannabis, and that is not an area I have a lot of expertise in. I do track one single ticker, this NXTTF. It's Namaste Technologies, and it's about a $2 stock. So if you ain't got nothing else to do, you can say I want to buy this, and I'll set my stop right below this pivot low, right? But it's still doing its best to capture the 200 moving average on the hourly. You just want to make sure you have your risk down. And in that publication, it talked about how they approve marijuana in the country of Canada. I think it was Canada. Yep. And there are many players in this, and some of them are very expensive. I was surprised at how expensive some of these stocks are. $158. How much is this one? Some of them, they were quite expensive. But you can pick up penny stocks in this as well. So if your penny stocks are your jam, then you can always play a little bit of penny stocks. But yeah, I'm just going to stick to what I know, stick to the chart patterns that I know with the volume that is there. I mean, these things trade in the millions. I like that. Foot Locker, and just taking this up to the 1272. Alrighty then, thanks so much for watching this video, and I'll talk to you soon.